Talk to me about what is happening here, because at the moment it appears we have two trades that are on. One is the oil trade, and the other one is the AI trade. And the Venn diagram doesn't appear to overlap right now. Does it? Should it? Will it?
I don't think it will overlap massively. Of course, everyone goes that the AI trade is ultimately an energy trade, but essentially they are price setters, so they can just pay the costs and kind of pass them on, or at least that's the narrative at the moment in AI. So even though you'd think that there's a massive overlap and people have tried to play the AI trade over the last year, even long before the conflict, through the energy angle, they don't completely overlap right now. I think the AI theme is much more important. For the last year, it's been all about AI and everything else has been kind of secondary. And it took us a while to kind of register that, all the noise around trade tariffs, everything else, all secondary to AI. Now, for the last, 2 months, or maybe less than that, for maybe only just from March, we temporarily got distracted from the AI theme to focus on the Iran conflict. But, since ceasefire was declared at the start of April, we've been back on the AI trend. Now, does it stay that way for the rest of the year? I'm not convinced. I think there's two things to think about. I think one is, obviously, if the narrative in AI changes suddenly, then the backdrop otherwise is more negative, and therefore you shouldn't rush to buy that dip if it turns negative on AI. Not if it turns negative on other reasons, people will still buy the dip. So I think that's one kind of narrative there. The other thing is that if the Iran conflict, because there's still no resolution, if it really kind of flares up again, because that's seen as the only off ramp is for the US to re-escalate, well then that will come back onto the kind of radar and kind of steal the limelight again for a few weeks while we get through that.
Mark, when do higher yields become a problem for equity markets?
You know what? Not right now, not while we're so focused on the AI theme. What they're doing is they're eroding the background fundamentals. So they're making the dynamic much worse if and when the AI narrative changes. But they're not going to be the catalyst in isolation to change that story. And I think, unfortunately, we do have a real stagflationary impulse coming through from the conflict in the Middle East that's going to continue to feed through the data. But again, that doesn't change the narrative alone. AI is the most important story. What it just means is that, last year, if the AI story took a bump, you bought the dip rapidly. You knew it'd be temporary. The underlying fundamentals were so bullish until the Iran conflict. What's changed is the underlying fundamentals are not quite so bullish. They're still pretty constructive. And therefore, if the AI narrative turns suddenly, well, then things could really fall quite powerfully. But again, you don't want to preempt that.
Mark, you just come back from the US. How different is the view of US investors on what is happening in the Gulf versus what the rest of the world is seeing in the Gulf?
Yeah, they've been much more relaxed about it, I think correctly so. Remember, they are much more insulated from the direct effects, and they're energy exporters. So in many ways, their companies are more oblivious to this. They are starting to realize there's not an easy resolution, and the energy impact is starting to feed through over there. So they're suddenly turning more negative over the past week or so.